and lenders, your communities need your freaking help. Why is that? Well, get this. Did you know that single-family home sales to investors hit an all-time high? And you're saying to yourself, well, that's not really a big deal, but it is. Because, like I said, higher than ever. But we're not done.
For October, November, and December 2023, investor shares of all homes purchased were 28%, 27.3%, and 28.7%. Now, the previous high was in February of 2022, and it was 28.3%. Now, here's the kicker. By the end of the year, by the end of this year, 2024, investors will represent 30% of the purchase market.
So you might be asking yourself why we need to mobilize our loan officers and our realtors across the country.
Why are you doing this?
It's really simple. Here's what it is, guys. Not all investors are created equally.
Not all investors are created the same. For example, when you got your 1, 2, or 3 off investors, they buy a home, they generally live in the community, and they generally care about the state of their investment. They've got a lot riding on it. They are not the problem.
But you have to understand, when the institutional investor comes in, they don't give two shits about your community, these houses, or you. Further, the institutional investor doesn't care about high interest rates. They're going to buy the house anyways, and we have them right now. They don't care about overpaying for the property, which they're doing right now.
I want you to check out Clyde's house. This is a 2,300 square foot mid-colonial home, detached garage, now listing for just $3.5 million.
It's the only damn thing they care about. It is not cost, it is not rate, it is just simply about the acquisition. They're parasites coming into our community. For example, you might say companies like BlackRock, which has a GDP bigger than all countries in the world, except for the United States and China. They're bigger than Germany, England, France, India, you name it, all of them. And they're valued at over $10 trillion. And if you put Vanguard in here, who by the way is also owned by BlackRock and vice versa, are the largest investor of all 505 S&P 500 companies. Did you know that?
Did you know that?
They don't give two shits about you or your community or anything else other than owning your community.
So, loan officers and realtors, this is where you come in.
So if you know that the fastest growing part of your opportunity lies with investors, don't you think you should have a little plan?
All I really needed was a plan.
If you could charge your commission without fear of reprisal, wouldn't you go down that path? If you can create an entirely new income stream, wouldn't you do it?
Wouldn't you do it?
If you could sell to a local investor, do a loan for a local investor in your community, rather than allowing a blood-sucking corporation like BlackRock or Vanguard to come in, wouldn't you do it?
Wouldn't you do it?
Loan officers, same with you about all the above. But these non-QM loans are off the radar of regulators. You can charge whatever you want. Not that you're going to charge more, but they're less problematic compliantly than agency deals. So how do you get them?
Wonderful. How do we do it?
I can tell you, but I'm not going to tell you right now. I will tell you, but I'm not telling you right now. See, if you fill out the information down below in the link, I'll call you and I'll tell you, but I'm not just going to give everything away. You got to work for something over here. I mean, we're putting this together. I want a little back and forth with you, a volley, if you will. This way, I know that you made it to the end of the show, and that might be enough. Share the video, that'd really help. But yes, I do have a plan, a very simple plan.
I have a plan
for you and realtors in your communities to make a fortune off of non-QM loans. So if you want to, fill out the information below, share the show, and I will give you the plan to go along with your means and motive here. I hope this helps, my friends. Stay safe and have a great day. See you tomorrow. You know, loan officers, when you're thinking about where you're going to hang your license, everybody's talking about rates, but you see, you're asking yourself the wrong question. What you need to be asking is not what rates are, but how much is the house actually keeping? Well, if you want to work with a company that has one of the leanest, if not the leanest household back in terms of what they're taking, it's going to be with Capital Direct. They actually have a downline that pays, is intended to go back to you, and I love the downlines because it's kind of a hedge against a bad market. It creates another vertical for you. And the greatest part about Cap Direct is your voice is actually heard, where loan officers meet on a weekly or bi-weekly basis to determine the direction of the company where ownership listens. Along with the best tech stack in the country, Cap Direct is truly a revolutionary way of looking at loans, a company that is prepared to make the pivots and changes necessary for our changing markets. Listen, fill out the information down below and come join us. I'd love to talk to you.